How to draw psychological levels on the trading chart. Hello, this is Igor from FX Igor YouTube channel, and right now we're watching one stock chart where support level is $50 level and resistance level is $55 level. And if you see, you can see round numbers. But these levels are not just round numbers. By definition, psychological levels are market price levels, which are often K levels in forex or stocks market, denoted by round numbers. But those round numbers perfectly act as the levels of support or resistance. Human beings value simplicity. So from the trading perspective, it means the valuing whole numbers. Traders often use these numbers as entry, exit, stop levels. But like I said, it's not always right numbers. Sometimes can be 1.3, but sometimes can be 1.305. Sometimes can be the price middle two round numbers. So this is not exact science, and we cannot give exact definition that is always true. However, we need to know advantages and limitations of this theory. First, advantages. Psychological levels serve as a K levels of support and resistance. It is very easy to identify for novice traders and can be implemented in all financial markets, either stocks, commodities, forex, anything. On the other side, we have limitations. So not always 100% reliable K levels, and should be used as a guideline in conjunction with support indicators, any kind of techniques. And for me, it's very important thing. There's no such a statistical evidence that psychological levers are something special that can help you to be very good in trading or make, for example, for $1 risk and $1 target to have 80%, 70% success rate, something like that. No, these kind of levels only can give you some kind of edge, some kind idea which price to watch, when you should put a stop loss, target, entry position, and to think a little bit how will whole market, as some you need to think like a cattle. Will they all of them react on that level and buy or sell trades? And you can easily analyze market sentiment using this. First, on the beginning, I want just to tell you that in trading, there is no always clear definition. This is support, this is resistance, and this is it. No, because every single price level can be support or resistance. In just a few hours, everything can go around. For example, right now you can have support. You see this green line. Then we can see the breakdown, and after several hours, we can see that the same line that was support now is resistance, and now former support becomes resistance. And this is the very common thing in trading. The next thing, before I continue to talk about psychological levels, how to draw them, etc., I want to tell you that sometimes we are waiting for breakout, and the breakouts are very good to enter into trade. But as you can see, sometimes we have a false breakout. You see on this chart we have a free false breakout, and the last one with the strong bullish candle is real one. And only then, after you see that candle is closed and it's with a great body, you see the big candle, then you can enter into trade, and you are 100% sure that the resistance levels is broken now. Only then you should enter into trade. Sometimes you need to wait. I like to wait hourly close, daily close, weekly close, monthly close. I want to see, and only that after that close, I like to enter trade. Now let me see how we can draw the psychological levels in the best way. There are steps. First, you need to find important levels, usually on monthly and weekly chart. Always start with the charts like weekly and monthly. You need to have a big picture. Then you should add Fibonacci levels. Then you should find round numbers on the chart that are on that levels. For example, former support, former resistance, right now support, right now resistance, or 50 Fibonacci level, or former Fibonacci level, etc., etc. Count how many times are important levels trend validation points. What that means is, imagine that you have a support, and that support 5, 6, 7, 8, 9 times, for example, was successful support. That means that that support will become psychological level, because if you have a so strong support that lasts several months with 9 attempts, there were no breakout, you know that that support is very, very strong. And on the end, you should read news for confirmation. You can Google, for example, gold psychological levels new, or euro dollar psychological levels new, etc. You can see that people in news very often use the words psychological levels, and then you can see which level market and news think about. This is very good idea. Like I said, price level on this chart 7086 is price invalidation point. Why? Because this support, there is a red line here, the red color here, this support was very strong in December, and in March, between February and March, we can see that support didn't fail, and after that there was some bullish trend in the March, and we can say that this support from this moment will become psychological level. Even this is not a round number, but sometimes the number is no round number can be psychological level, because if you feel that every single time this support or resistance is so strong, it can be not beaten, sometimes you feel that like a psychological level, and in your mind and on the big marketers, we're waiting to see breakout, and when you see the breakout, usually we can see strong push, either to bearish trend, either to bullish trend. The next thing that we can talk about is psychological levels right now. For example, this is gold, and in July 2010, gold almost hit 2000. It was a strong psychological level, didn't succeed. But in November 2019, we touched 2000 price, and it was a huge expectation that gold can be be pushed and very, very strong bullish trend. But there was another attempt, and as you can see today too, 2000 price level for gold is still psychological level. And if you think a little bit, 2000 is a really, really round number. Then, like I said, we can watch various examples on our chart and looking for psychological levels. But you need to know that it's very important to feel and see reaction on that level. For example, you can draw some level. It can be round number, no problem, but you need to see reaction. On this chart, you can see that for the line B, price doesn't react. Look this, right now, this circle, line B, doesn't react. But on line A, where is the possible resistance, we have reaction. So from my perspective, resistance line A is psychological level more than possible resistance line B. So you need to see confirmation. You need to see that price react. Without price reaction, there is no psychological level. The next thing that I want to tell you, that you can draw trend lines, like I said, but sometimes you can draw secondary perspective or trend lines. Right now, you see the main trend lines. We are getting main trend lines when we draw a trend line between lowest lows for support trend line, and when we connect highest highs, it's a resistance, some kind of a trend line. But sometimes you can draw trend lines if you connect highest highs and lowest lows, but can be just a secondary perspective. You can use only last couple weeks, and on some other chart you can draw or for last 6 months, 2 years. So you can have several support trend lines and several resistance trend lines. The next thing that I can tell you, that some traders, they don't use only trend lines, they use circles. For example, sometimes you can see a channel like a circle, and you can use that to watch and draw this on the chart and use this in the process when you want to determine a trend line, determine important price levels and psychological levels. Another thing that I want to show you, that sometimes market can be in range, and if market is in the range, this support or resistance, when you see the bounce several times, it's a very, very important price level. For me, it's a psychological level, because if one attempt, second attempt, third attempt, and several attempts, I see that in the range market, I expect to see strong bullish trend above resistance or strong bearish trend below the resistance. Right now, for example, I just want to tell you that you need to know and to learn how to add Fibonacci levels. You know, it's a simple. If you're a beginner trader, you go to Insert, Fibonacci, Retracement, and then you draw Fibonacci levels on your chart. So you can add trend lines, Fibonacci levels, support and resistance, former support and resistance, important levels that you see and feel on the chart. Like I said, it's not a science, it's an art, because you can measure in your perspective where is the market react. Sometimes you can measure some price level that's not round number. If you see there is a strong reaction there, on the end you will get something like this. This chart is created by Michael Boutros. He's an expert in trading. He is one of the experts from the dailyfx.com. I monitor him. I like his charts. I like his way of trading. He's a short-time trader, and he trades, for example, 25 pips, 30 pips, something like that, targets, and 25 pips, 30 pips, stop loss. It's around a quarter the daily average range. This is his way of trading. Sometimes he has a bigger trade, sometimes the trades with a smaller stop loss, but always he tried to have at least quarter of daily average range for stop loss. And what's important here, he put on the chart everything. As you can see right now, he has trend lines, he has pitchwork, he has channels, he has all kind of highest highs and lowest lows. For example, for last week, highest high and lowest low for the month, for the year, for example, opening range of the year. He drew everything on the chart. And then what he looks for, he's looking for price level where several levels overlap. You know, for example, you can see that there is a price level right now. It's 2022 open, and you can see it's a pink color on the chart. And you can see on that price level, we have several important price levels. For example, we have a Fibonacci level, very close, is a 2018 high, for example. And you can see that on that price level concentrate a lot of important price levels, and because of that, we can tell that this 2022 open is a strong support right now. And if I see that price is go below this level, you can create a sell order because psychological level is broken. Now I will show the same example. This is the euro dollar. It's a 4-hour chart, and on this chart we have, for example, 38.2% of Fibonacci level retracement, October high or weekly open. We have several important price levels on very small portion of this chart, and this area is very strong. On this chart you can see the red circles. This red small circle right now, you see the arrow, represents the moment when we can enter into trade, or we can see some kind of important breakout, important psychological. As you see right now for this day, it's the end of November in the 2022. The psychological level for euro dollar is 1.01, and this level is a psychological level. Like I said, on a monthly chart, on the weekly chart, the psychological level is 1, but in short-term period, psychological level is 1.01. And if we see the price is below this level, that means that the bullish trend invalidation point is here, and we have probability that that trend line is broken, and we are again have euro dollar down in short time frame. When I say short time frame, it's a 4-hour time frame. And this is it. This is all. I wish you a great day, and bye bye.